Welcome to the Nifty Noon podcast. We're your shortcut to being well-informed without all the noise. Today, we're doing a deep dive into some really impactful stories from our Nifty Noon newsletter. We've got a packed week to cover. I mean, everything from the U.S. government putting economic data on-chain to Google Cloud launching its own Layer 1 for finance, plus a look at the volatile NFT market. And we'll get into some massive institutional moves in Solana and a huge whale rotation, Bitcoin to Ethereum, billions of dollars. So basically, if you want to get your head around where traditional finance is meeting Web3 right now, you're definitely in the right place.
Yeah, it's been a week of incredibly significant signals, especially how major institutions, even governments, we're not just watching anymore, are they? They're actively engaging with blockchain tech. We'll try and connect those dots today, look at the trends underneath, and what this all actually means for digital assets overall.
Okay, let's dive right in. We'll hit the headlines from our recent Nifty Noon updates, starting with the latest one and working back. First up, from our August 29th Nifty Noon update, we're seeing Uncle Sam, specifically the U.S. Department of Commerce, taking a pretty big leap onto the blockchain. They've partnered up with Chainlink and PythNetwork, two big Oracle providers, to bring official macroeconomic data directly on-chain.
Right. And the striking thing here isn't just that they're doing it, but the kind of data. I mean, we're talking key economic indicators, stuff like real gross domestic product GDP and the PCE price index, straight from the Bureau of Economic Analysis, the BEA. And like you said, this isn't some small pilot project hidden away. It's going out to at least 10 different blockchains. Think Ethereum, Avalanche, Base, major players. It feels foundational.
Exactly. And what I find really interesting, building on that, is how this move, well, it seems to contrast with some of the caution we've seen before from the U.S. government, doesn't it? Is this maybe a real shift in strategy, positioning the U.S. to lead in digital assets? And the market definitely took notice. Pyth's token, PYTH, and Chainlink's LilyNK both saw some decent gains right after the news broke.
They did. And the real game changer here, I think, isn't just about transparency, although that's good. It's about enabling totally new kinds of financial products. Imagine inflation-linked digital assets that automatically adjust based on that official BEA data.
Yeah.
I mean, that directly impacts how you manage risk. It allows for, much more sophisticated automated trading in DeFi, better risk management for protocols, even more accurate prediction markets in real time. This really does signal a new phase, I think, a deeper integration between public institutions and the whole on-chain economy, moving beyond just speculation to, real data-driven utility.
Okay, so from government moves, let's pivot to the tech giants. Our August 28th Nifty Noon update had some big news from Google Cloud. They've given us more details about their Layer 1 blockchain, the Google Cloud Universal Ledger, or GCUL, and they're positioning it very deliberately, seems like, as credibly neutral and high performance, aimed squarely at traditional financial institutions wanting to get into blockchain.
Yeah, and a key insight comes from how they're defining that neutrality. Rich Widman, their head of Web3 strategy, basically said it's different. Unlike chains maybe built by competitors, like a Circle or a Stripe, GCUL wants to be open ground for any institution, which is pretty significant, right? Because if you're, say, Tether or Adian, you might hesitate building your core stuff on a rival's chain. Google's trying to avoid that friction, aiming for wider appeal.
And for developers, get this, the chain will support Python-based smart contracts.
That's huge.
Yeah, that's a big deal because it lowers the barrier to entry massively for financial engineers already comfortable with Python. All those quants and data scientists can jump in more easily. Plus, they didn't just announce it in theory. The Chicago Mercantile Exchange, CME Group, is already piloting GCUL for tokenized assets, wholesale payments, real institutional use cases.
Rich Widman's point on neutrality, it sounds good, but how credible is that neutrality really if it's ultimately run by Google? That's the question some people are asking, especially for institutions looking for true decentralization. What are the trade-offs there?
Yeah, that's definitely a valid skepticism you hear from the crypto community purists about calling private permission systems decentralized.
Sure, but if you step back and look at the bigger picture, GCUL's entry with a full launch planned for 2026, it absolutely heats up the race. You've got major tech and fintech firms all scrambling to build these next-gen financial rails. And that competition, whatever you think about the decentralization aspect, it could really speed up institutional adoption of blockchain.
Yeah.
Google's name alone carries a lot of weight in the enterprise world.
Okay, before we move on from the tech side, let's just quickly look back at Wednesday's Nifty Noon. It asked a pretty pointed question. Is the NFT mini cycle already over? It had been a rough week for NFT holders. Floor prices took quite a hit across the board, and this seemed to follow Ethereum pulling back after hitting that new all-time high near $5,000. Shows how linked these markets can be.
Oh, absolutely. And digging in, you really see how fast and tight that correlation can be. I mean, major collections like Pudgy Penguins, their floor dropped to 10.5 ETH. Bored Ape Yacht Club down to 9.75 ETH. It just highlights how, these digital assets are often tied to the price of their underlying blockchain's token. Ethereum moves and the ripples spread out.
Right. But it was interesting because, well, not everything was crashing. The original CryptoPunks, for example, showed surprising strength. Their floor held pretty steady around 47 ETH. That suggests something different, maybe more confidence there. And crucially, even while prices were down for many, trading activity stayed high. Pudgy Penguins, Moonbirds, still doing millions in sales volume, so the market wasn't dead, just active.
Well, yeah, and while a dip often causes panic, that sustained high trading volume, especially in those more resilient projects like Punks, it kind of suggests something more complex is happening. It's not just churn, maybe not just panic selling. For people with long-term conviction, these dips can actually look like buying opportunities. It perhaps signals a bit of market maturation beyond just pure speculation. There are buyers ready to step in when prices fall, which shows some underlying belief, not just hype.
So for someone watching this, does the strength of CryptoPunks during a wider dip suggest a kind of flight to quality within NFTs, like we see in traditional markets sometimes?
Yeah, I think that's a fair comparison. It does suggest that maybe within this diverse NFT world, certain collections are starting to be seen as more like blue chip assets, where maybe their historical significance or cultural weight provides a bit of a cushion against broader market swings. And it also shows buyers might be getting more sophisticated, distinguishing between, quick flips and assets they see having lasting value.
Okay, let's move on then. Our August 26th Nifty Noon update seemed to announce that SOL treasury season might be upon us. We're seeing this huge wave of institutional money flowing towards Solana. Several big firms are planning to raise billions, literally billions, to build corporate treasuries just for holding Sarah dollars. It feels coordinated.
It really does. And
Yeah.
the striking thing is how much it mirrors Michael Saylor's strategy with Bitcoin, but applied now to Solana. You've got firms like Galaxy Digital, Jump Crypto, Multicoin Capital, reportedly aiming for $1 billion for a joint venture, Pantera Capital looking at maybe $1.25 billion, and they join others like Sharps Technology, DeFi Development Corp, already raising hundreds of millions specifically to load up on Solana. It's a very significant collective bet on Solana's future, it seems.
Okay, so this flood of cash is obviously a huge institutional thumbs up for Solana, but what's the potential downside here? Could it lead to, I don't know, more centralized control of the network?
Yeah.
Or just pump the price without real growth if the network itself doesn't keep up?
That's a really critical question for you to think about, and it taps right into a debate we've heard before in crypto. If you look at the bigger picture, yeah, this trend could lead to market concentration, just like the discussions around Bitcoin treasury firms. You could end up with a few huge corporate balance sheets having maybe too much influence over Solana's direction or governance. That's the risk. However, the immediate impact, this institutional stamp of approval plus the capital itself, is likely going to boost developer activity. It certainly helps market sentiment. And by buying up large amounts of SOL dollars and taking it off the market, these treasuries could create some serious supply pressure, which, many analysts think could push the price up, at least in the short to medium term. But yeah, those long-term decentralization questions, definitely something to keep an eye on.
All right, finally, let's rewind to our August 25th Nifty Noon update. This one detailed the great BTC to ETH whale rotation. The market got a real jolt when one single whale started selling off a massive amount of Bitcoin, over 24,000 BTC. Some of it hadn't moved in 5 years, and the sheer size triggered flash crash.
Yeah.
Liquidated something like $310 million in long positions, people betting the price would go up, just wiped them out.
But what really stands out is what happened immediately after. The follow-through was decisive. The seller took the proceeds over $2 billion and rotated it straight into Ethereum. And didn't just stop there. They then staked a huge chunk of it, $1.3 billion of that new ETH. So this massive move from biggest crypto to its main competitor happened right as Ether was hitting new all-time highs.
Yeah.
It really grabbed everyone's attention. You got to wonder about the setup that Whale has, right? Multiple monitors, maybe a seriously fast internet connection, and nerves of steel to pull that off without huge slippage.
Totally. And get this, while the size initially made it look maybe a bit clumsy, like maybe they lost money on the execution, Deeper analysis suggested it was actually incredibly sophisticated. Estimates are the whale made around $185 million just on the ETH BTC swing trade itself. They navigated the chaos really well, avoided major slippage, which is just nuts at that scale, shows deep market understanding.
Yeah, very impressive execution. So this leads us to think, what does this mean for your view of the market? This event really highlights this broader story we're seeing of major players, even longtime Bitcoin believers, diversifying into Ethereum. And with analysts suggesting ETH might have more room to run near term, this whale's very convicted trade. You could read it as a strong signal. Confidence in Ethereum's ecosystem, its continued growth. It maybe points to institutional interest broadening out beyond just Bitcoin, seeing Ethereum's role, its staking yield, is really compelling.
So yeah, this wasn't just some random whale splashing around. It was a calculated, very profitable strategic move by a huge player. Does this point to a wider institutional trend we should expect more of, or is it maybe more of an isolated, opportunistic play?
It's hard to say for sure if it's isolated, but it definitely adds fuel to that growing narrative.
Yeah.
We have seen institutional views on Ethereum shifting. It's not just seen as speculative anymore, but as a yield-generating protocol with this thriving ecosystem. This whale's move, especially staking such a large amount, fits right into that. It suggests sophisticated money increasingly views ETH as a core holding, not just something to trade in and out of.
And that kind of wraps up our deep dive into these really impactful stories from our Nifty Noon updates this week. I mean, we've seen government data landing on chain, Google building new financial infrastructure, the NFT market's ups and downs, huge institutional bets on Solana, and that massive whale pivot from BTC to ETH. It honestly feels like we're watching the financial world rewrite its rulebook in real time. It's exhilarating and maybe a little bit daunting trying to keep up.
Indeed. These stories, when you put them together, they really highlight just how fast this digital asset space is evolving. You've got institutions, governments, big individual players, all increasingly not just recognizing blockchain, but actively using it for real stuff. It's just a powerful reminder that those lines between TradFi and Web3, they're getting blurrier all the time, opening up all sorts of new paths for innovation, for investment, and maybe systemic change too.
So thinking about all that, what really stands out to you? Are you seeing more concrete signs that institutional adoption is truly taking root, or does all the market volatility still make you hesitant? Definitely something to mull over as you navigate this incredibly fast-moving world of digital assets. We really hope you found these insights useful today. Thanks so much for joining us on this deep dive, and if you want to keep up with these updates as they happen, get them straight to your inbox, you can find the Nifty Noon team on X and Substack.
Until next time, keep digging, keep learning, and yeah, keep asking those important questions.